Good morning, traders. Steve Ganz here, and I'm going to add to a start to finish position that I opened. In this case, I opened this thing quite some time ago, over a year ago. I shared a prior video on this just a week or so ago on AVGO, where I went in and I looked at the pros and cons of buying one long call leap that didn't expire for 2 years versus spending the same amount of money, in this case about $9,800, on 20 shares of stock. And I compared and contrasted the two of those. Now, I am in this position. This is a position that I opened, again, about a year ago. It is up very nicely at 750%. So my $9,800 investment is currently worth about $73,000. Now, that said, as I mentioned in that prior video, there's some things I want to look at with this. I want to consider with this. And what that boils down specifically is taking a look here at AVGO, at its explosive move, and thinking about, will this continue? And at this point, here's my thinking. This is the uptrend line that's been in place for quite some time, and it's bumping its head on that uptrend line, number one. Number two, I look at how stocks move in waves. So I look at the breakout back here. This is quite some time ago. But when this thing broke out, it went from 650 up to about just about 900. So 650 to 900, 250 points. When we broke out in this area, we broke out from around the 1,000 range, and we're up just a little over 1,250, so 250 points. So I'm looking at a few different things that make me think that AVGO may not go explosively higher than where it is now in the near future. So if I have that belief, what might I be able to do to this trade to A, lower my cost basis a little bit in the trade, and B, maybe juice it a little bit, maybe bring in some additional income on the trade? So again, here's my current position. If I held the opinion that this thing is just going to run and run and run, I wouldn't do anything. But again, I'm thinking that at least in the short term. Now again, this option doesn't expire until January of next year, almost a year from now. But in the short term, if I think that I might be stalling a little bit, what might I do to, again, juice this trade just a little bit? Well, one of the things that I could do is I could come in and sell a short call against this position. So I will sell a call. I will sell it. If I take a look at my chart here, I'm thinking maybe the 1350 range. I want to give this thing a little bit of room to run. So if I came in here and it looks like maybe the 1350. Oh, see, I'm out in January 2025. I also want to sell something shorter term here, like maybe March 28th. So let's just come in, and there's not any real magic to that particular date other than I really don't know that I want to go out too terribly far on this at this point. So if I come in, I take a look at selling a 13, let's call it a 1350 on March 28. I can sell that for $39.10, $3,900. Now, one of the reasons I am considering this trade is because right now everybody's in buying mode on this. So people are buying long calls. They are very bullish. There's a frenzy. People are paying up a little bit for these. So right now we are trading at 1279. People are buying long calls that are 45 days out, and they're spending $3,900 to buy those long calls. So I kind of like that. I've got something that they want. They're paying up for it. Now, what is my reward risk scenario in doing this? Well, we can see that if I do that, first thing I'm doing is I'm adding $3,900 approximately in profit to this trade, assuming that we don't blast above this particular price of $13.50. So I have room from here at $12.70 up to $13.50. And if we don't get above that $13.50 by my March 28th expiration, I get to pocket all of that money. If we do go above 1350, I will end up losing some on this particular option, but of course my long option here, my leap, is going to continue to gain value, but that's essentially going to flatten out my P&L. My trade-off here is I'm going to take in $3,900, and in exchange, I am trading off upside potential above 3,900. I'm giving it away. I don't have upside potential beyond 3,900 at that point. So I have to recognize that. But I also can look at the fact that I am changing my max loss from 9,800. If I come back here to my previous position without that call in place, I had a max risk of 9,800 if the market tanks back down to here. By selling or that short call and bringing in more premium, I have reduced that now to 5,800. And maybe if the market stays in this general range and doesn't go above my 1350, maybe once we get to around the expiration on this short strike, maybe I sell another one and I take in another $3,000-$4,000. That's going to juice this trade even further, and it's going to reduce my risk, my overall risk in this trade yet again. So this is what's called a time spread or a diagonal. They can be pretty tricky. This particular one, though, was not started or launched as a time spread or a diagonal. It was launched simply as a long call, and now I'm coming in and I am diagonalizing it. Now, I'm going to show you one other thing here. If, for example, I felt like I am fairly certain that AVGO is now stuck, I am 70, 80% positive this thing is not going to go higher. Now, I'm not, but if I were, and I further wanted to juice this trade, I could sell 2 of these, and I could even further juice this trade. In this case, I'm selling 2 of them at $3,900. So I'd be bringing in almost $8,000. That is all extrinsic value that's going to drip out of these short calls between now and the expiration date of March 28th. However, here, if I get above 1350, rather than flatlining on my P&L, I start going the other direction on this. But we can see that if I take this back, you can see my T0 here, really nice. My T0 is nice and rounded. I've taken a lot of the delta out of this trade. It's more delta neutral at this point. If we look at our delta, we're 24 positive delta, but without those in there, we are 100 positive delta. So I am flattening my delta significantly. And so that's something I might do if I thought that AVGO was going to stall in this general area and or I had a fear of AVGO backing up. This takes some of that backup risk, if you will, out of the trade also. So those are some different considerations that people might take in a long call position to where you can diagonalize it at some point if you've hit what you might consider to be a ceiling in the stock price. Now, one other thing to keep in mind here, what I'm going to do personally, or actually what I already did in this case, is I sold this long call. I only sold 1 of them. I will wait for a little time to pass. If AVGO does pop up through the 1350 and looks like it's on another tear, then I might consider selling yet even another short call at some point up here and essentially turning this more into a condor type of position. It wouldn't be a true condor because the expiration strikes are different, but it would have that general look and feel about it. So again, I wouldn't do this right here, right now, but let me just show you what that might look like. It might look, something like this. Let's see. Yeah, something more along these lines where I could, again, bring in even more premium up here. Of course, if the price blew through and the price was up here, I'd be getting a lot more for that at that point. I could even do this now if I wanted, and then I've got that flat top for a short bit. But I like to wait and see. I'm not necessarily in a rush, and that way I would cap my P&L here at the 85 range. But if I got above 1,500, then I start to take a loss. Well, if this thing breaks out, I think it could break out hard and fast. So I really don't want to have my upside starting to cost me money if it continues to blow through that point. So for right now, I'm just looking at selling the one call, bringing in $3,900 additional dollars on this trade, knowing that I am capping my upside a little bit. So that's it for the update here on the AVGO start to finish trade. Take care, everyone.